Hello everyone, welcome to Smart Investing. I'm Albert, host of the channel, and today this video is going to be about the banking services sector, also known as the bank sector. So we're just going to do 5 stocks. I'm going to do a fundamental and quick technical analysis. Again, it's in no particular order, and I'm just going to start off with the stocks that I have from the bottom all the way to the top. So the first one up that I have, and again, I might have gone over these stocks in the past, but seeing that the stock market has been going down and it's official that we are now in a bear market, uh, ratings have changed, prices have changed, earnings have changed, forecasts have changed. There's a lot of variables in the market that have pointed to the stocks going down. So to start this off with this year, a lot of stocks have been going down. So again, once I go over each sector, I'll try not to repeat the same stocks because obviously the banking sector is really, really big, and there's about 600 banks. So it's hard not to go over the same one, even if I did it more than once. So there's just so many stocks to look at in order to not, you know, repeat the same mistake and go over it again. So anyhow, the first stock that I have is MYFW. So we have here, it is called First Western Financial. So today was a big sell-off. Today was actually pretty historic. Today is Monday, June 13th, 2022. And we have here the price of 28 bucks and 45 cents. And we have here, we have some volume. We have a 52-week high and low of 34, low of 24, a difference of 10 bucks. Pretty average. This company pays no dividend, as we can see here, nothing. Again, that's pretty rare for a bank not to pay dividends unless they're a new company and they're having cash flow problems, or it could be that this is a company that's just really, really, really small and they haven't grown as fast as they should, or they haven't grown as fast as they want to. So with that being said and done, we're just gonna look at the chart, and then so we did that. Now we're gonna look at an analysis as to what we have for the quant ratings. I'm not even gonna, I'll do my own technicals, so I don't really like to look at what the technicals have to show me as far as the app showing me. So the highest number that I have on here is for momentum. Do I agree with that? I would say no. I do not see much momentum. I mean, if we look at the 5-year, yeah, it looks like it's going up. But then you start to shorten it. And obviously, I've said this before, ever since 2020, stocks have been going up. And if we're looking at this whole year so far, we've been at a downtrend. And then look at this drop here within the past month and even the past 3 months. Now you compare that for the year. Look at how big this drop is. Again, not looking at the price, but look at how big this drop is. You're going to see, I bet you look at 9 out of 10 stocks that you look at, you're going to see a big drop like this for this past week or even for the past day for today. But definitely for the past week, you're going to see so many stocks, 9 out of 10 stocks. If you're looking at stocks today, like right now, then yeah, you're going to see big drops like that. So anyhow, it is confirmed that there are plenty of stocks that are on downtrend. Momentum, I kind of have to disagree with that. Even though today's only Monday, 1 out of the 5 days of the week. So we still have 4 more days for the trading. But again, today's Monday, June 13th, and they already confirmed the bear market. So 4 more days left to finish off the week. And even though we are going to finish off the week, we're already more than halfway through June. And again, if you look at it for the whole year, once we passed this week will actually be the majority for the whole year. So these past, I don't even know how many weeks are in 6 months. I'm trying to think. So there's 52 weeks in the year. Half of that is 26. So 27 weeks of downtrends for the majority. So again, we still have 25 more weeks. So what I'm saying is the majority of the year is already at a downtrend. So for this end of the year, I'm already, evaluating stocks as if they're gonna go down. So enough with that. We're gonna look at the analysis real quick. So for momentum, again, I disagree with that. So they do not pay dividends. Earnings are trash for so many companies. With the key indicators, these numbers are pretty much worthless as of now because of a downtrending market. So what I'm gonna say is basically comparing to their peers, that's pretty much what you want to see. And then obviously you want to see stocks. Yeah, they might miss their estimates, but you don't want stocks to be missing their estimates by a lot. It's hard to say or define what is a lot, but okay, if we look at the top of this screen here, the one that I actually outlining, take a look at that. Then we'll take a look at this here at the Q4 2021. Now you compare it to the Q1 2022. So you see how these two dots, they're closely together, but they're very close together. I mean, you can't really say they're not close enough. I mean, they are close enough. Now look at the Q4 2021. You look at that. So for the Q4 2021, that's a pretty big gap. That's a pretty big gap to fill in right there. So what I'm saying is, regardless of the price, just by looking at this gap, right here, that says a lot. And comparing to this one is not really a gap. So that's all I'm trying to say, is that if we see a bunch of gaps for their earnings like that, that's just not a good sign. Again, I'm expecting maybe two gaps, maybe for the Q3 and the Q4, but next year, I don't know. Next year is a whole different ballgame. So again, we're focusing on this year. And you can see here they're at 91% debt. So we have net income. Revenue is not giving me revenue. Operating income, I don't know why. This thing has to get upgraded. But anyhow, comparing to their peers, they seem let me look at it again. Sorry. So comparing to the peers, I don't know how accurate these numbers are because again, for this ranking system, there might be so many people or companies that are tied in the same spot. You know, they're tied in the same place, and then you might have 100 companies that have no results for their numbers. So everybody's at a standstill, locked in the same place with the same ranking. So I'm not going to go off of this ranking. I'm just going to disregard it. But again, just by looking at the numbers that I have here, I'm just going to use this. I like to call it my first page. Definitely use this as my guide, which I always do. So again, the market cap is too small. I don't like small cap companies during a downtrending market. And it makes sense. And it's crazy to say that during a bull market, these are companies that you do want to look at when they have a low share price, because those gains, even the slightest gain, can give you a really big percentage. You know, you compare this stock, it's gone down 5%, but it's only lost $1 and change, like about $1.60. Then if you were to look at the same percentage on a different stock like Amazon, yes, you're going to lose way more money than that. But again, for Amazon or a quality and valued company, then it's actually worth it. Because not only are you buying into the company, but there's just the quality of the company, and you don't risk, I would say, losing as much as you should, because first off, it's a company that's not gonna be like, you know, acquired, or they're not gonna sell the company because the company might be just too big. It's too big to fail. But again, there's just so many factors as to why a company might do good or won't seem to be in so much financial trouble based on the numbers. So that's all I want to say. So next up I have is SHG. So SHG Shinhan Financial. It sounds like a Chinese company. So 52-week high and low of a difference of $10. Market cap is rounded off to 16 billion. They do pay a dividend of 1.9, and they have a dividend yield. Excuse me, a dividend yield of 6.27. We're looking at this chart. Looks pretty flat, and again, has gotten nowhere. I do not like flat-looking stocks or charts. It just it doesn't sit right with me to break even after even a year. It doesn't feel right. You know, you go for 1 year and you only get $10 throughout the year. It just doesn't feel right if you put so much homework and thought and analysis into it, especially if you know what you're doing, and then all of a sudden, you know, at year end, you look at it and it's like, wow, I didn't even gain much, or you feel like you broke even. I know it sucks, but again, you can't see the thing. The thing is, with a lot of investors, what people like to do, they only think about themselves. They don't think about what other people are thinking about, if they like it. Or if they do like it, then it's something that's a very, very short trend, because people involved with groups and stuff like that, these are just random people. I mean, it's not an actual capital firm or anything where you guys are always going over the same information, or you have restricted files or stuff like that. So there's more of a structure and system and all that when it comes to working at firms, instead of just talking to people online and trying to give the trust card to everybody, because everybody thinks they know what they're talking about, and 9 times out of 10 they don't. That's just a sad reality. And the funny thing is, ever since the beginning of this year, I've seen less and less news from a bunch of channels. Channels do not like to give bad news, but again, my channel is still here. I'm still providing honest information and feedback and analysis and evaluations and all that. And where are all these channels? I think I follow about actively. I follow about maybe 6, 7 channels. Out of the 6, 7 channels, only like 3 of them are active. Well, actually more. Probably, I'd say 7 or 8. So only out of the 8, only 3 of them are active. Everybody else is just in la la land, I guess. And the total amount of channels that I follow about a little over 20. So I don't know what's going on with all these channels that seem to be good during a bull market, but now we're in a bear market and they're nowhere to be found. Or actually, to be honest, they're doing worse and not admitting it. Just a few channels, but then also the ones that do admit it, those are the ones you want to keep looking at. But then other channels that want to get into something new for their evaluations. Like, for example, there are a few channels that are fundamentals and now they want to get into technicals, and then it's like you're doing this at the wrong time. So I'm sorry to say, but it's just too little too late. You got to find somebody already who knows what they're doing and what to do and what information is accurate that you can actually learn or get from them. So that's all I want to say as well. So anyhow, we have this stock SHG. So the highest number on this is, we have value and we have momentum. Value based on the market cap, I get it. The PE ratio is 5. Earnings are pretty strong. It does have some volume. I'll give it that. It does have some. Looks like it has some value. The dividends, they only pay dividends. I mean, it looks like they pay once a year, and then in 2021, it looks like they paid a total of 3 times. And again, these are random payments. These aren't consistent payments. And the splits that they have is 2-for-1 in 2012. Now, let's look at something. So I was right there, like a Asian bank. They're in Korea. And what do they actually do? Do they do anything special? Or is it because they're in another country? So, I think that's what it is. They're just like a regular bank. At the bottom it says debt collection, credit investigation, private equities, real estate investment and operation. So a pretty typical and standard loan officers for companies or newly developed small businesses. So, I mean, again, the payments are random, and I don't even have estimates. But again, this stock, let me see something. I don't have total results, but these guys are at 92%, a little over 92% for debt. So, moving on to the next one. So for this stock, would I watch list it? Maybe. I mean, it might be good for a Korean stock in Korea, but in the US, it just doesn't look like a good stock. Again, I could be wrong. I hope I'm wrong, but that's just my observation. That's what I'm gathering from what I'm seeing in my information. So I'm gonna say no to that one. Next up that I have is VABK, Virginia National Bank Shares Corp. So I do not like the chart. So far, no. They're a very small cap company, 52-week high and low. Looks like it's overvalued. They do pay a dividend. Numbers are not too bad. They could do way better. I mean, everything looks about the same. You have a 6.0 rating, close to 6.0, 5.0, 6 point, and a 5 point. I mean, these aren't bad numbers. I think I've seen worse. Question is, do I agree with the quant rating analysis? I'm not sure. So I'm not really sold on it. So I'm gonna say no. And dividends are flat. They have not done any splits. And that is what I have for this stock. And we're going to move on to the next one. It's slightly undervalued, so hey, get it while you can, huh? But again, I just don't like the company. Look how long it took to actually go up. So from April, and then it started going up towards the end of the year in 2020. So yeah, this has no momentum. It just is not a good stock. So I'm gonna say no to that one. Next one up, ZIONO. So Zion's Bank Corp. Looking at the chart, slightly went up. Now it's starting to go down. Nothing crazy. Nothing eye-opening to make you say, wow, the stock is going up so high and so fast. So the highest rating from the quant that I got is again momentum. I don't see any momentum on this stock, so we have a difference of $5 right here, and then they are a small market cap. So yeah, people like to yield chase. I mean, that might stick out to some people. For me, and preferably for other people, I wouldn't look at percentage. I'd look at total payment. Again, to each their own, but that's just my suggestion. Take it or leave it as is. But again, I hope you guys do the right thing, do the smart thing, and learn from your mistakes. But again, that's up to you. So anyhow, we're gonna look at the dividends for the stock. It looks pretty flat, no raise, but looks like they've been continuously paying off since 2018, the same amount. So in 2018, they started to pay 39 cents, and then 2017, So in 2018 was the last raise, and they raised it by only 4 cents. Well, it did go back down only for this quarter, and then if you can see here, it's been 39 ever since. So it might have just been, they might have just had a really, really, really ugly quarter. So 1.5 dividend, and then 6.1 earnings. So again, I don't have proper information on me or with me, so just please bear with me. What I have, again, they're not showing me revenue, they're just showing me net income. So that's actually not a good sign for the net income. I see this. And this right here is not really flat. It's slightly going down like that, like at an angle. I don't know if you guys see that, but I do. That is definitely not a good sign. These guys are a 93% debt, and I just don't like the numbers. Again, the peer comparison, that's inactive. Usually it's accurate, but again, it's just inactive, you know? And then we're gonna look at the chart one more time. As we can see, went down, went up. So it went down, went up, and then slightly going down. So now, with that being said, I'm gonna say no to that one. And then the last company that I have is NAVI, Navient Corporation. So that is definitely a lot of momentum. Definitely, right off the bat, I see a lot of volume. So we have here 52-week low and high, a difference of $10. Very undervalued is what I'm seeing. Earnings are okay. They can cover the dividend. So a total dividend payment of 64 cents. I'm not too crazy about it. People do like to yield chase. So all you yield chasers, the dividend yield for this company is at 4.8, close to a 5. And then as you can see, it had a huge rip all the way from 2020 right here. So we have this huge rip. So from 2020 all the way to about the end of 2021. Wow. I don't like this company. Again, I could be wrong. I hope I'm wrong. But I don't see anything. Just don't see anything positive looking for this stock. So value, saying you're getting it, if you were to buy it, you're getting this at a really, really, really steep discount. So that's pretty good to know. And it's showing me quality. Showing me that it has some quality. So we're going to read about that right now. Navi Corporation. So we have here, provider of education, loan management, healthcare, government, federal, state, and local. So they help, I guess, communities and people and places that, are in need of assistance financially. So again, they're not a banking stock, they're consumer lenders, as we can see here. I get that every once in a while where I would think it's a bank stock and it's not. It's just it's always a related sector. So again, looking at this, let's see here, dividends, same payment throughout the last like 5 years or whatever. And then again, I don't have the numbers that I want to. At 96% debt, I mean, that's just awful. And that's for the past 5 years, actually. So definitely no. They don't know how to manage money. So NAVI, so yeah, that's the end of NAVI. So everyone. I hope you guys enjoyed the video. Like, subscribe, comment, give some suggestions, whatever. Anything's fine. Any communication establishment is fine with me. If not, thanks for watching. So I'm gonna try to do a short video right after this. I know I took too long, and I tried to just show and talk about for today as well. So again, thank you guys for watching. I hope you guys have a great night. Start looking into watch listing companies, or even consider buying your favorite companies, because we're in for a long ride for this year. It's gonna be a tough grind for this bear market, especially towards. I know it's gonna last towards the end of the year. So um, be smart and be patient, guys. So thank you guys for watching. Take care, and I'll see you guys in the next one.